Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Tuesday, May 12th. Well, firstly to the Euro US dollar, and here we're analysing this second last candle that's on the chart. The last candle here is one that is currently developing, but in this second last candle, the one that has just finished trading, we see that we've had a switch in the colour of the body from black to white, and that suggests that net momentum has shifted to the buyers away from the sellers here, and that shift in net momentum back to the buyers has come at this very important area of support at 111.60, and we know that it's been an important level in the recent past, and in the last couple of days it's acted as an area of support, as has the Ichimoku cloud. With the buyers attempting to build some momentum here, there is an opportunity for them to continue this trend to the upside, and we technically have had a change of trend here. We have a candle with a higher high and a higher low, and therefore changing the trend to the upside. Unfortunately for the buyers, they've lost some commitment as the market was testing up above the previous day's high. And we see the shadow on the top of this candle, and that coincides with the market testing just above the Candlestick indicator, and with the Euro US dollar unable to close up above there, it suggests that we still have some slight bearishness in this market, and that is going to be a very important level moving forward. At the moment, the Candlestick is trading at 112.28. And we are just seeing this new candle as it's developing, testing just around that level. We are just probing through there, so a lot depends on how the market reacts around that level. If we do see some price rejection there, obviously 111.60 will come into play again, and any bearish close down below there could quickly see the Euro US dollar testing down to the top of the Ichimoku cloud, which trades at 109.94. Down through there we have support testing all the way down through to the 108.47 level, and within the Ichimoku cloud we have potential strong support at the Kijun-sen indicator, the pink line here at 109.55. And just looking at the hourly charts here with the Euro US dollar, and for today's trading has completed. The market opened down below the Ichimoku cloud and below the Kijun-sen indicator, suggesting that we had a very strong negative bias in the long-term and medium-term timeframes. The market then rallied after the first couple of hours to find some resistance initially around the Kijun-sen and the middle pivot point level, but then the buyers were able to break out in a bullish manner up above there, and we saw some strong follow-through with the market finding some weak resistance around the first pivot point resistance level, and then the buyers coming into the market very strongly to test through the Ichimoku cloud and just through there, closing in a very indecisive manner through there, but trading exactly or almost exactly to the third pivot point resistance level, and then seeing some selling coming in after we touched that area. For the remainder of the day, the market found strong support at the top of the Ichimoku cloud, and moving forward that is going to be a very important level. It trades at 112.09, and we also have the Kijun-sen and the middle pivot point level around that area, so some very, very strong support around the 112 level. If we do see the market trade through there in a bearish manner, we could see the Euro US dollar testing down through to the bottom of the Ichimoku cloud, which trades around the 111.56 level. But at the moment we are seeing some strong buying here. The candle has just completed trading, has broken out up above the Tenkan-sen in a bullish manner, and it does suggest a very good opportunity for the buyers to test up to the first pivot point resistance level at 112.82. Moving next to the Aussie dollar, US dollar, and here we see some congestion that's been going on for the past couple of weeks, with the market forming something of a symmetrical triangle, and that follows a rally off the lows, roughly about the 75.50 area, 75.51, and some decent uptrending price action in the second time frame, with the market making a higher high or a higher peak and a higher trough, taking out the peak when we tested up above the 78-cent level, and then eventually breaking out through the top of the Ichimoku cloud. And following that breakout, we didn't see the strong follow through that I like to see to confirm the breakout, and we saw the indecisive candle form there, and then the market sell off and congest over the following couple of weeks. This has formed something of a symmetrical triangle. Not quite a perfect pattern because the size of this triangle is just a little bit too large for the size of the trend leading into it. But still, it is important, and what will complete this triangle will be either a close up above the upper barrier or a close down below the lower barrier. And important will be whether that close is going to be either bullish if it's to the upside or bearish if it's to the downside, and we would have a lot more confidence in the move developing further in the direction of the breakout if that the bullishness or the bearishness is in line with the direction of the breakout. In terms of Ichimoku, we do have a bullish market in all three time frames, and for today's candle we've seen the development of this white body candle, and the largest white body that we've seen for the past week. And with the buyers taking control, it does suggest that the buyers are attempting to build some momentum, but we have that important 80-cent level that we've tested to and just slightly beyond in the last couple of weeks, and there is some doubt about whether the market will be able to break out up above there. But what we'd like to see would be a bullish breakout on the close, especially above that 80-cent level. Any breakout to the downside would potentially see the market trade through the Tenkan-sen and then giving us a bearish market in the short-term time frame, and we could then see the market testing down through to the support at the Kijun-sen indicator trading at 78.13. On the hourly charts for the Aussie dollar, US dollar, and for today's trading, it has completed. We saw the market initially open down below each of the Ichimoku indicators. We didn't see development of any strong bearish candles, however, and that certainly did raise doubt about whether we were going to see the market test to these pivot point support levels. After the first couple of hours, we saw the market break out in a strong bullish manner up above the middle pivot point level and the Kijun-sen and the Tenkan-sen, and then trading through to the first pivot point resistance level and finding some resistance around there, and then the buyers coming in solidly on a breakout up above there and testing to and just above the second pivot point resistance level. For today's trading, we've seen the market open up above the middle pivot point level and the Tenkan-sen indicator. We are testing above there and have just closed just slightly below there, but not on a strong bearish candle. If the sellers do come into this market in the next couple of hours, strong support around the middle pivot point level, and we also have the Kijun-sen trading around there, roughly about the 79.56 level. Any bearish breakout down below there could see the Aussie dollar trading down through to potential support around the top of the Ichimoku cloud at 79.13, and with the first pivot point support level trading just around the bottom of the Ichimoku cloud, we're likely to see very, very strong support coming in around that region. But as we move further into the day, we do see the support from the Ichimoku cloud actually move higher and moving up to around the 79.50 level after the next couple of hours. If we do see buyers come into the market and if we can breach the 80-cent level, which has been an important level, and we've touched through there today in the last couple of hours and been rejected from there, but if we can see the market break out through there in a bullish manner, we could easily see the Aussie dollar trading to the first pivot point resistance level at 80.19. But in the way that we've tested through the 80-cent level in the last couple of hours, there is some considerable doubt as to whether we will be able to close up through there.